The first group, okay, we have many groups in each company. Those stakeholders who are interested to know about the use of accounts. Who uses the accounts of a business? Which group would analyze, or which groups will analyze a company's accounts, like calculating ratios? This is as it is only the accounts of public limited companies that have to be published. We shall concentrate on the uses and users of these accounts. Okay, we have the following groups here that have an interest in a public limited company's accounts and the ratios based on them. The first group is the group of managers. They will be able to have much more detailed and frequent accounting information than any of the other groups. Now, what they use the accounts for? The managers, okay, will use the accounts to help them control over the performance of each product or division of the business. Managers will be able to identify which parts of the business are performing well or poorly. Accounting data will help in decision making. For example, whether to expand the business, change the price levels, or close down a product or division that's not doing well. The managers will calculate accounting ratios too. Ratios are very useful in a quick way for managers to compare their company's profit performance and liquidity. Ratio results may be compared with the other years and other businesses. You see the example here in this slide. Okay, it is important to compare accounting ratios in these two ways. One ratio result on its own means very little. Okay, let's check this example with these two companies. Hertwood Trading Company Limited, ROCE, or return on capital employed. In 2018, it's 12%. Okay. Is this a good or bad result? This question can only be answered by managers looking at past results and those of other companies. For example, here's some additional information. The same company, Hertwood Trading Company, ROCE in 2017 is 5.8. So there was an increase in the ROCE. In Westpay Trading Company Limited, another company, the ROCE in the same year, 2018, is 20% here, which is higher. See here? Higher than Hertwood's ROCE. Now, the managers of Hertwood Trading can make realistic comparisons. Their company is performing more effectively than in the previous year. Okay, it shows here 5.8 to 12%. But there is a big but here. It still needs to improve further to equal the performance and profitability of one of the company's closest rivals. So it's very clear. Okay, why do we compare with the past years? To check whether the company is doing well. And the managers may use also the ratios to check their level or their performance against the performance of another company. In this case, it is very clear they have seen that they have the ROCE 12% only, same year. With another company, it's 20%. So it's obvious that they have to improve further to equal the performance and profitability of one of the company's closest rivals. They could monitor these ratios. Okay, another group of interested stakeholders Why are they interested in this public limited companies accounts? The shareholders, okay, here. Limited companies are owned by shareholders and they have a legal right to receive the published accounts each year. Okay, what they use the accounts for. The shareholders and potential investors, remember they are potential investors, they want to know from the income statement how big a profit or loss the company made. The profitability ratio results compared with the last year's, and the higher the profitability ratio results are, okay, the more likely shareholders are to want to invest by buying more shares in the company. They will want to know from the statement of financial position if the business is worth more at the end of the year than it was at the beginning. Okay. They will also assess the liquidity of the business. They do not want to invest in a company with serious cash or liquidity problems. Okay. We have another group here, the creditors. Okay. These are other businesses which have supplied the goods to the company without yet receiving. The statement of financial position will indicate to creditors that the company has to pay back and the cash position of the company. Okay, liquidity ratios, especially when compared to the previous year, will indicate the ability of the company to pay back all its creditors on time. If these results suggest the company has a liquidity problem, suppliers may refuse to supply goods on credit. Of course, they will be a little bit scared. They will be anxious. They will be hesitant to lend money, supply, or resources to the company. Okay, the next group are the banks. Why are they interested? These may have lent money to the company on a short-term basis or on a long-term basis. They will use the accounts in a similar way to creditors. If the business seems to be at risk of becoming illiquid, okay, cash is not flowing, it is unlikely that a bank will be willing to lend more. There will be a limitation already. Okay, the next stakeholders, the government. Why is the government interested to get into these accounts? The government, the tax office will want to check on the profit tax paid by the company. If the company is making a loss, this might be bad news for the government's control of the whole economy, especially if it means that workers' jobs may be lost. Okay. Another group is the workers and trade unions group. The workers and trade unions will want to assess whether the future of the company is secure or not. In addition, if managers are saying that they cannot afford to give workers a pay rise, it would be useful for the workers and the unions to assess whether the profits of the company are increasing or not. Another is other businesses, especially those in the same industry. The managers of other companies may be considering a bid to take over the company, or they may just wish to compare the performance of the business with that of their own. Businesses will compare their performance and profitability with others in the same industry. Okay, let us try to see from your book on page 318 the limitations of using accounts and ratio analysis. Okay. All of the users of accounts we mentioned earlier need to remember that ratio analysis does not provide all the answers to many questions. And the questions they have about the performance and financial strengths of a business. And here you'll find in this slide the limitations of using accounts and ratio analysis. What are the limitations? First bullet, we have the managers will have access to all accounts data, but external users will only be able to use the published accounts which contain only the data required by law. Ratios are based on past accounting data and may not indicate how a business will perform in the future. So for record purposes only. Now the accounting data over time will be affected by inflation or rising prices. And comparisons between years may be misleading. Lastly, the bullet here, bullet number 4, says different companies may use slightly different accounting methods. For example, in valuing their fixed assets. These different methods could lead to different ratio results, therefore making comparisons difficult. And you'll find here the revision summary of business accounts. We have discussed that we must be familiar with this revision summary illustration so that we can test ourselves whether we could present the topic in our own words, on our own, and this will serve also as your revision for the topic if you're facing a quiz, pop quiz, or midterm exams or finals, or the mid-year exams. Revision summary illustrations are very useful. So we have this one, and everything we have discussed in this presentation are embedded in this illustration. We have another one that will follow after a few slides. Okay, let's go to another case study using ratios to help make decisions, which is found on page 318 of your text. So the case study reads on, and you have all the data, pertinent data here, and we shall go on answering activity 26.3, which refers to this case study. Okay, I hope you have your book with you so we can go on answering the questions in activity 26.3. This is the case study activity 26.3. Now, we have 5 questions here, and each of these questions are answered on the next slide. Okay. Now, this is just a revision of what we have discussed, and I will leave this for you as your guide answers. You may answer the questions in activity 26.3 and refer to these guide answers later to check against your answers. Okay? So there you go. We have 5 answers to the 5 questions in activity 26.3. And this is what I was talking to you about. Another revision summary about ratio analysis. Okay, it would be better to revise in this manner so that everything will be in your memory based on this topic. These are the formulas we have taken up in this chapter. Okay, so let's go to the International Business and Focus, and in this particular presentation we had the Royal Dutch Shell Public Limited Company. Okay, as it reads on page 319 of your textbook, we have the case presented and the situation presented. Also on page 300, the discussion points, I will leave it to you. Kindly answer them and send your answers to me via Discord or WhatsApp. Okay, now going back to our exam style questions found on page 321. Okay, yes, here we go. The first exam style question, short answer and later response, which is also found in your textbook. Okay, we have the case situation is here, and we have the questions A, B, C, D, E. All right. These are the guide answers to question number 1. And for question number 2, the answers to question number 2 will be left for you to answer as well. Okay, A, B, C, D, E. Now, question number 2 and 3, we have the answers here. Number 2 and for number 3. Okay, so you can go back to these slides for your easy reference. Okay, so we have 3 questions in the revision questions from the booklet. We have more. We have 10, I think. This is question numbers 4, 5, and 6. And the answers are 4, 5, 6 here. For 7, 8, 9, and 10, you'll find the answers here. Okay? Now we have the MCQs from the booklet. Okay. Just let's take note of our answer. MCQ number 1. The formula for the return on capital employed ratio is here. Number 3. And for question number 2, the formula for the gross profit margin in percent is here. Number 3, the formula for the net profit margin in percent is here. Number 4, company's net profit margin fell from 15% last year to 12% this year. The best explanation for this change is overhead expenses rose by more than sales revenue. Okay, with reference to page 314. Number 5, the next slide, we have for questions 4, 5, and 6, we have to refer to this data in the document from Spice Company Limited ending March 31st, 2013. Okay, so for question number 4, the gross profit margin was, right, 33.3%, and the net profit margin was 10%. Okay, and we have here number 7, the return on capital employed was 75%. Return on capital employed, the formula is ROCE. Net profit, okay, 50 minus 35 is 15, okay, divided by the capital employed. So 15 divided by 200. Let's try to work it out in our calculators. There you go. 15,000 divided by what the capital employed is here, 200,000. Okay, times 100 is 7.5. Okay, so we have it there. Number 1. For number 7, the answer is 1. let's go to number 8. For questions 8 and 9, we will make use of this data. Number 8, the value of the company's current ratio was, here, using our formula, this will be our answer. For number 9, the value of the company's acid test ratio was, okay, it should be 1. The formula, acid test. Okay, we have current assets here, 45, minus inventories, 25,000, divided by current liabilities, here, 30. We have 66.67, or times 100. It's just moving the decimal point right here. So it's 0.67 here. The answer is number 1. Okay, for the last, is this the last? No, we have 3 more. Okay, number 10, the liquidity of our business is declining. Which one of the following statements best explain this quote? We have here, the business is finding it more difficult to pay short-term debts. Number 11, which one of the following statements about accounting ratio analysis is correct? We will consider choice number 2. Many stakeholders groups find ratio results useful. For the last MCQ, one of the drawbacks to ratio analysis or disadvantage of analysis of accounts is here. Business in different industries can be expected to have very different ratio results. Okay, so that's all for our MCQs in chapter 26 from the booklet. Okay, we have for you a sure task. Okay, the end of section case study. Read this case, and you have the appendices there, appendix 1 and appendix 2. And here are the questions 1 to 4. Work on it and send your answers to me via direct message in our Discord account and WhatsApp account. Once again, thank you for your time and shared time with me. And always be safe, be healthy, and happy virtual learning, especially with your other subjects. Okay, bye for now.